All right, let's talk about Bitcoin. It's a topic that can make your head spin, right? You hear about it everywhere, from finance pros to your cousin who's suddenly an expert. But what is it really? Is it this brilliant revolutionary asset, basically digital gold for our modern world? Or is it all just hype, a huge bubble, kind of like that whole Dutch tulip thing from centuries ago, just waiting to burst? Let's get into it and try to make some sense of the chaos.
And if you're confused, you have every right to be. I mean, just look at what the so-called experts are saying. You've got one camp, the bulls, who are convinced Bitcoin is going to rocket up to $200,000 in just a couple of years. But then you've got another group, the bears, looking at the exact same market and predicting a catastrophic crash in the exact same time frame. We're talking extreme fear sentiment. So which one is it? Are we all going to the moon, or is this ship about to sink? It's pretty wild. Yeah, it's enough to give you whiplash. So, what on earth are you supposed to believe? Well, that's what we're here for. In this explainer, we're going to try and cut right through all that noise. We're going to break down the two main stories about Bitcoin, the two completely opposite arguments, to give you a solid framework for how to think about this thing for yourself. Okay, so let's start with the first big argument. This is the one you hear a lot: Bitcoin as a modern-day safe haven. The whole digital gold idea. Now, to really get why people believe this, we first have to take a quick look at the system it was built to be an alternative to our traditional financial world. It all boils down to the money we use every day. You know, the dollars, euros, yen in our bank accounts. It's called fiat currency. Now, way back in the day, a dollar was basically a claim check for a real physical piece of gold sitting in a vault. Not anymore. Today, its value comes from one thing and one thing only: our collective faith that the government backing it is stable and will honor its debts. It's kind of like a promise. So because our money isn't tied to something physical, it gives central banks a really powerful tool. It's called quantitative easing, or just QE. It sounds super technical, but the basic idea is pretty simple. When the economy is struggling, they can essentially print more money, digitally of course, to pump into the system and try to get things moving again. But, and this is the really crucial part, there's a catch. When you create more of something, what happens to its value? It can go down. And it's the same with money. Every new dollar that gets created can make the dollars you've worked hard to save worth a little bit less. This is why some people feel like the system punishes savers, especially when interest rates are practically zero. Your savings just don't keep up. This brings us to what some analysts call the teeter-totter effect, and this image shows it perfectly. As people start to worry that the value of their cash is going down on one side, they naturally start looking for somewhere else to put their wealth. They're searching for an asset on the other side of the teeter-totter, something they believe will protect their purchasing power. For centuries, that something was gold. And this is exactly where the argument for Bitcoin comes in. Proponents say, hey, this is the modern version of that, and they point to a few key features. First, a finite supply. We know for a fact there will only ever be 21 million Bitcoin, ever. No one can just decide to make more. Second, it's decentralized. There's no single government or bank in charge that can freeze your account or change the rules. And finally, think about what this means for people in countries with out-of-control inflation like Venezuela or Argentina. For them, it can be a way to escape a currency that's collapsing. Okay, so that's one story. But now we have to flip the coin completely, because there's an equally powerful and totally opposite argument that Bitcoin isn't a safe haven at all, that it's nothing more than a giant, high-stakes gamble. This side of the debate makes a really important distinction. They say when you buy something with no real underlying value, just because you hope the price will go up so you can sell it to someone else for more, you're not really investing, you're speculating. Or, as author Robert Kiyosaki puts it pretty bluntly, you're gambling. You're betting that someone else, the greater fool, will come along and pay more than you did. And what's fascinating is this kind of human behavior is absolutely nothing new. I mean, history is just full of these speculative frenzies. You go back to the 1600s, people were trading their entire homes for a single tulip bulb. Fast forward to the late 90s, companies with zero revenue were suddenly worth billions just for adding .com to their name. Critics look at the crypto craze and say, see, it's the same old story, just with new technology. This quote just nails the psychology behind it all. It's driven by one of the most powerful emotions there is, FOMO, the fear of missing out. It's less about logic and more about emotion. People weren't necessarily buying Bitcoin because they did a deep dive on blockchain technology. Nope. They were buying it because they were seeing stories online, hearing about their friends making a fortune, and they were absolutely terrified of being the only one left behind.
And look, this kind of speculative rush comes with huge, very real risks. First, the volatility is insane. The price can double or get cut in half in what feels like a heartbeat. Second, where there's that much money and hype, you're going to have fraud. Scammers love a gold rush. Third, you've got governments. What happens if a major country decides to ban it or regulate it into the ground? And finally, what about technology itself? Bitcoin was the first, but what if something newer, faster, and better comes along and makes it obsolete? So we're left with two completely different narratives, digital gold or digital tulips. How in the world do you make sense of that? Well, the key might be to stop asking which story is right and instead shift our own perspective. We need a way to think about what purpose any asset, including Bitcoin, could serve in our own financial life. This chart is actually a fantastic tool for this. You can think of any asset as playing one of three main roles. First, there's income. This is stuff that pays you just for owning it, like a rental property bringing in rent. Bitcoin doesn't do that on its own. Second, there's growing your net worth. You buy it hoping the price goes way up. Sound familiar? That's the speculative side. And third, there's a hedge. You own it to protect you if another one of your assets, like the dollar, loses value. And that's the digital gold argument. As you can see, Bitcoin fits perfectly in those last two boxes. And that right there is the big aha moment. It changes everything. The debate stops being about, is Bitcoin good or bad? Because honestly, that's not a very useful question. The much smarter, much more personal question is, what is my purpose for this asset? Am I trying to hit a home run and grow my wealth? Okay, that's speculation. Or am I trying to buy a little insurance policy against the traditional financial system? That's a hedge. Your purpose defines your strategy. So once you're clear on your purpose, your why, there's one last piece to the puzzle. And frankly, it's the most important one of all, actually managing the risk you're taking on. One of the sources we looked at uses this amazing analogy. Think of the entire market like you're a passenger on the Titanic. You can't steer the ship. You have absolutely no control over whether it hits an iceberg. None. The only thing you can control is your own preparation. You can decide whether you're going to have a lifeboat ready, just in case. So the question becomes, where's your lifeboat? And that lifeboat, it's your plan. It's a simple 3-step plan you make before you do anything. Step 1, define your purpose. We just talked about this. Are you speculating or are you hedging? Step 2, know your risk. This is the golden rule. Only, and I mean only, invest an amount of money you would be okay with losing completely. And step 3, have an exit strategy. Decide ahead of time the price at which you'll sell to take profits, and, just as important, the price at which you'll sell to cut your losses and live to fight another day. Look, at the end of the day, nobody knows how the Bitcoin story will end. It could change the world or it could fade away. But honestly, the real story isn't about Bitcoin. It's about you. The real question is, what role are you going to play in your own financial future? Are you just going to be a spectator, sitting on the sidelines watching it all happen? Are you going to be a gambler, just throwing some money in and crossing your fingers? Or are you going to be an architect, someone who carefully and thoughtfully designs their own plan with a clear purpose for every single piece?